Welcome to the deep dive. Today we're digging into something pretty fascinating. A new player, AIEX, making some really extraordinary claims where AI meets finance.
Claims that definitely grab your attention.
Exactly, claims that could, reshape things or maybe just fade away. You, listening in, you're always trying to cut through that market noise, right?
Yeah.
To figure out what's really driving innovation and what the next big wave might actually be.
Precisely. And AIFEEX, well, they aren't just calling themselves another DApp. They're using this term AID protocol.
AID protocol.
Yeah, AI-driven decentralized finance protocol. And they've launched with what they call a full-stack disruption strategy.
Okay, full stack disruption. Sounds big.
It does. So our mission today in this deep dive is really to unpack that strategy, explore the vision, which is ambitious, and the potential that frankly, has a lot of people talking.
So if you're someone who wants to quickly get your head around what's pushing innovation in DeFi and maybe evaluate what could be a genuinely significant opportunity, well, this deep dive is definitely for you.
We'll break down how they're positioning themselves, their growth engine, which is pretty interesting, and the whole story they're building around it.
All through the lens of a, let's say, savvy strategist. So let's jump in. This full stack disruption. What exactly are they getting at with that term?
Well, when they say full stack, it signals they're aiming way beyond just one app. It suggests they want to integrate and innovate across the entire financial setup.
The whole thing.
Yeah, from the base blockchain stuff, how assets get tokenized, the user interfaces, even governance decisions, and infuse AI into all of it. It's a really comprehensive vision, not just tweaking one little piece.
Okay, that makes more sense. And that ties into their identity then, not just a DApp, but this AIF protocol. What does that specific label, AI-driven decentralized finance protocol, actually mean in practice? What's the tech implication?
Right. So AIF protocol suggests that AI isn't just bolted on. It's deep inside the core functions.
How so?
Think AI managing liquidity pools on the fly, optimizing yield strategies automatically based on market shifts, maybe even adjusting risk parameters autonomously. It's a much deeper integration than, say, a typical DApp, where AI might just power a fancy dashboard.
Okay, so it's aiming for more autonomous, intelligent operations running directly on the blockchain.
Exactly. That's the vision it presents.
That definitely sets them apart. Now, you mentioned they're targeting issues in traditional finance. What specific problems are they trying to solve, and why is that a smart strategic move?
They're going right after the classic headaches, the
Right.
ones that have honestly plagued traditional finance forever. The lack of real transparency.
On the black boxes.
Yeah, and the unnecessary risks baked in, plus the fact that regular people often get shut out from the best opportunities.
Limited access. Right.
By positioning themselves as the solution to these fundamental problems, they're trying to pull in a wide audience, people who are just fed up with the old systems. It's a very relatable hook.
Okay, here's where it gets, I think, really interesting and, frankly, demands a closer look. This dual magnet strategy they're using.
The high returns and the guarantee.
Yes.
Yeah.
Incredibly high returns. They're claiming up to 1,000% APY, which, okay, we see high APYs in DeFi, but then crucially, they also promise a 100% principal guarantee.
Yeah, that's the combination that raises eyebrows.
That's a mix you almost never see, right?
Yeah.
Especially in DeFi, where high yield equals high risk, usually.
Yeah.
As a strategist, what's your immediate reaction to such a, well, audacious proposition?
It's definitely disruptive, and it immediately makes you ask, in finance, high returns and safety are usually opposites. They just don't coexist easily.
So how could they possibly do both?
Well, to pull that off sustainably, you'd need an incredibly sophisticated mechanism underneath it all.
Right.
And it would have to be transparent. Are they using complex derivatives? Some kind of novel insurance built into the protocol? Maybe a new tokenomics model that shifts risk around in a way we haven't seen?
So the details really matter here.
Immensely. The white paper, the audits they'd need to show a very clear, verifiable blueprint for how this works. Especially if you're a serious investor looking past the headlines. The genius is in the attraction it creates, no doubt. But the real test is, can they deliver it sustainably?
Right. It's not about just believing the claim. It's about understanding the underlying innovation, if it exists, that makes the claim possible. Because if they can deliver that, well, that really would change the game in DeFi risk reward.
It absolutely would.
Which leads us nicely into their growth plan. They call it the Snowball Effect. How do they see that working?
So their Snowball Effect has a very specific starting goal. Hit a total value locked, or TVL, of over $1 billion USD.
$1 billion. Why that number?
It's not random. It's a strategic play to build massive social proof. In DeFi, a big TVL shouts credibility, security, market confidence. It acts like a giant magnet, pulling in more users, bigger investors, even institutional eyes. It feeds itself.
Okay, so get big to get bigger. How do they actually start that snowball rolling and keep it going? What are the mechanics for growth and keeping users around?
It kicks off with that dual magnet we just talked about. The high returns pull people in, they stake their assets. This locked up capital plus the returns creates a powerful network effect.
My name.
The more capital staked, the more users join, the more valuable and stable the platform becomes for everyone involved. Simple as that. But then crucially, it also creates switching costs.
Ah, so it's harder to leave.
Exactly. If you're earning those high returns and you believe your principal is safe, why move your money? It makes users sticky, keeps capital locked in longer.
Right.
It's a very calculated way to build an ecosystem that holds on to its users and assets.
And what's really intriguing here is they're not just using financial carrots. They're layering in this AI system, the AIS, to apparently deepen engagement and loyalty.
Yeah.
How does the AI actually help the snowball grow bigger?
That AI integration is key for the long haul, beyond just the initial attraction. This AI isn't just working behind the scenes. It could be giving you personalized investment ideas tailored to your specific risk appetite or goals.
Okay, personalized recommendations.
But potentially more strategic than that, it might power AI-driven voting. Imagine users feeling like they're actually helping steer the ship, participating in governance, not just passively holding tokens.
So it builds a sense of community, ownership.
Precisely.
Yeah.
It turns users into active stakeholders. That deepens the connection, strengthens the network effect, and boosts retention even further.
Got it. So it's not just about the money. It's about building this participatory connection. The high TVL gets attention from the big players, but the locked funds plus the engaging AI, that's about making the ecosystem strong from the inside out, attracting and keeping people and their capital.
Exactly right. It's building a sticky ecosystem where people feel invested both financially and maybe emotionally too. It's that holistic approach, money, engagement, smart tech that's central to their snowball effect plan.
All right, let's shift from the mechanics and strategy to the story, the narrative. Because in this space, how you frame things, a perception you create, can be just as powerful as the tech itself. And AIFEEX seems to have crafted a pretty compelling brand story.
They certainly have. The core narrative positions them as an on-chain gold mine, or like a in Thai.
An on-chain gold mine, that's evocative.
It really is. It immediately suggests huge opportunity, untapped wealth, all waiting to be discovered within this decentralized world. It's a powerful image designed to stick in the minds of potential investors.
And they back that up with the snowball growth idea, not just as strategy, but in their marketing, to create this feeling of unstoppable momentum.
Exactly. It taps into that urgency, that classic FOMO fear of missing out. It suggests you need to get in now while it's growing fast, join the movement before it gets too big.
And speaking of movements, they seem to connect their product to something much bigger, right? The whole DeFi revolution idea.
Absolutely. That's a really potent part of the narrative. They're not just selling a product. They're framing AIFEX as part of this fundamental shift in finance. They're inviting you to be part of a movement, a pioneer in a new financial age. That's much more inspiring than just, here's a new token.
And this big vision, it's not just talk. They've laid out a clear, staged plan. The DApp we're seeing now is just stage one, the foundation.
Right. Then stage 2 is listing on centralized exchanges, CEXs. That means wider access, more liquidity.
And stage 3, they're even hinting at a potential IPO, an initial public offering down the line. That's thinking really long term.
It's incredibly ambitious. It shows a clear trajectory, or at least a planned one.
And throughout this narrative, the AI piece keeps coming up as a key differentiator.
Yes, and that's smart. In a DeFi market that's getting pretty crowded, just being decentralized isn't enough anymore. Highlighting the deep AI integration is how they set themselves apart, offering something unique that feels, futuristic.
And the story isn't just for individual investors, is it? They seem to be targeting the whole Web3 world.
That's right. They're aiming to attract partners, developers, to really build out that whole full-stack disruption ecosystem they talk about. It suggests they want to be more than just a platform, maybe a foundational layer for other Web3 stuff too.
Building a whole digital economy around their protocol.
That seems to be the grand vision, yes. By appealing broadly, they aim for a self-sustaining system that keeps growing.
Okay, let's bring this back down to earth for a second and look at the market signals. Because strategies and stories are great, but the numbers tell their own tale. And the early performance seems, well, pretty remarkable.
It really does. Just 13 days after hitting PancakeSwap, the growth has been impressive, suggesting that stage one strategy is working, at least initially.
What are the key metrics looking like?
Okay, so total liquidity is nearly $1.4 billion USD. That's huge. And it's split pretty evenly between their token, AIFEX, and USDI, around $694 million each, roughly.
Wow, $1.4 billion in liquidity in under 2 weeks. That's staggering.
It really is exceptional. It speaks volumes about the initial confidence, and the market cap has jumped to about $3.74 billion USD,
And the token price, AIFEX.
hovering around $17.82 USD currently. And importantly, it's shown a pretty steady upward trend since it launched.
What about trading activity?
The 24-hour volume is around $748,000 USD, but here's the really striking part. Apparently 99% of that volume is buying pressure.
99%.
Yeah, that indicates incredibly strong demand, way more people wanting to buy in than sell. It's a powerful signal of, well, current market conviction.
And it's not just big money, right? How many people are actually holding this?
The holder count is also strong, about 281,370 separate accounts. So nearly 300,000 users jumping in within just 13 days. That shows significant reach and adoption very, very quickly.
So if we tie this back to the strategy, these early numbers, they look like strong validation, don't they?
They absolutely do. They show powerful momentum, a fast-growing user base. It confirms their initial stage one plays are hitting the mark, building that social proof and network effect they wanted.
But there's always a but with rapid growth like this, isn't there?
Well, yes. The question naturally shifts. It's no longer can they grow. Clearly they can, at least initially. The question becomes, can they sustain this? And maybe more importantly, can they actually validate the core economic model behind it all?
Right. So where does that leave us? We've sort of unpacked this full stack disruption strategy. The mix of AI, those really bold claims about high returns with safety, and the powerful story they're telling. And it's clearly fueled some incredible early growth.
The immediate success is hard to deny.
But the real challenge, the critical question for any sharp investor or strategist listening, that lies ahead, doesn't it?
Absolutely. Look, the early surge is impressive, yes. But it forces us to ask the tough questions. Can AIFEEX keep this momentum going? That's one thing. But more fundamentally, can the business model itself, especially that very ambitious promise of 1,000% APY plus 100% principal safety, actually hold up over the long term through different market cycles?
What are the mechanics making that possible? Are they transparent?
Exactly. What's really under the hood enabling those returns are their hidden risks. Systemic issues we haven't seen yet. We've seen high-yield promises face challenges before, haven't we?
We certainly have.
And then there's the execution risk. How well will they actually navigate Stage 2, the CEX listings, and the even more ambitious Stage 3, the potential IPO? Ideas are one thing, execution is everything.
Those are definitely the crunch questions. AIE it's a truly fascinating case study in strategic innovation in DeFi right now. So as you, our listener, consider its potential, maybe the question to ask yourself is this.
Can this platform genuinely rewrite the rules of risk and reward in DeFi with its unique tech and bold claims? Or will the realities of the market eventually catch up, revealing the limits of even the most compelling promises?
It's definitely a journey we'll all be watching very closely.